Hey, everybody. Guess what we're going to talk about today? Sector rotation is kicking in this week, and this is where we're going. We got a big story this week. My name is Pete Renzulli. Thank you for attending Stock Trading Pro today. We are going to talk about money flow today and whether or not order flow is shifting out of technology stocks, which were absolutely on fire to start 2023. Here's a clue. Hopefully, this isn't coming back for everybody, but we are seeing less selling in this particular sector. And ExxonMobil with new all-time highs last week. We're seeing money shifting over into energy stocks as well, which they were a dog for a while and a lot of false breakouts. But the one big price level that we're going to be paying attention to in Exxon specifically today, we're going to give you that price level. We're going to talk about some aerospace defense stocks that are in the game plan today. We're going to talk about whether or not tech stocks are pulling back for another opportunity to buy, or has money already started to shift out of them and going into other groups. So this is going to be a really wild week this week. We have a massive amount of big economic data this week. I think we have Fed speakers every single day this week. We got a lot to cover this week. Last week, I want to be clear. If you happen to be trading stocks last week and found last week to be a little tough, I got news for you. It's like one of those little breakup things. It's not you, it was the market. Last week, the market was a little bit choppy. You had to go up towards the top of the power pyramid to find some very stock-specific ideas. I do think the profit potential is going to open up a little bit this week because we did have tech stocks pull back. We had industrial stocks kind of go sideways. And like I said, healthcare stocks are starting to work their way into the list. And I want to make it very clear about healthcare stocks. They are not in bullish order flow yet. However, they did energy and healthcare stocks put up some really good energy candlesticks last week, and it's the start of something interesting. We get a lot of questions that people come in. How do I catch these moves at the beginning of the move? I'm actually going to show you that right now. So stick around. We just got to make sure we post this, and we'll be back in just 1 second. Okay, so obviously, thank you so much for joining me here. For those of you here live, we're going to go over the daily ticker newsletter and how I'm setting up the week. We're going to actually run down the market, what we're looking for specifically in the stock market. Then we're going to break down sectors and kind of working our way over a little bit into industry groups. But we're going to do a little bit higher level today because that's where the market is. Last week, if we take a look and see how things traded last week, it was kind of mixed. Work over a 1 week performance. You could see some profit taking over here in communication services, and one of the big ones pull back in Facebook. Google just absolutely got hit really, really hard. And one of the things we're going to talk about in Google this week is whether or not this deep pullback off of the flub that they had, they're kind of at the top now with the AI stocks. We're making a big list of AI stocks right now. The Chat GPT, which is probably the hottest thing online right now, causing everybody to kind of scramble. Google actually made an announcement. They kind of flubbed the announcement in the demonstration. The question now is, was that a one-time mistake that's a buying opportunity at this really big support level for Google, or is money shifting out of tech stocks? Google just happened to get a head start, and does it have $10 more to the downside? So we're going to actually map out a trade in Google today as well. I just want to say hello to a couple of people. LJ, good morning. Leon, how's it going, pal? Michael Hollis just became a member of our community. Wanted you to know how much I appreciate that. That's for sure. T Brown, good morning, pal. How's it going? All right, so we're going to work our way over into breaking down not only the market, but also the sector. So I want to zoom this in a little bit, just so you can see what's going on over here. This is actually how things finished up last week. And what's kind of interesting is you could actually see where we had a couple of really easy bullish weeks of trading. And then we kind of had neutral communication services continuing to move to the upside. And then about a week ago, it was pretty good. But look at how money shifted out of that pretty quickly. Now, I just want to come back onto the screen and just really be clear about this. One of the biggest questions we get, and it was actually a lot of questions in January specifically for trading the stock market, was we had these massive moves. And why did I miss most of it? Why didn't I catch it? Why did I only catch the end of it? Why didn't I see when these stocks started to have buying pressure and catch them a little bit earlier? And look, I know everybody wants the easy button, right? Boom, just tell me the one thing I need to do for 5 minutes so I can make money. you got to do just a little bit of extra work, like maybe 15 minutes worth of work. I mean, if you want me to do it, just let me know. Click the link in the description. You can actually find more about that. But I'm talking to you. I'm talking to the person who did not see these kinds of moves. And when they did unfold, you didn't actually capitalize on them. Obviously, there's been some just absolutely amazing moves. I'm going to go to one of the extreme moves that actually happened in January. That was United Airlines. These kinds of moves tend to start intraday, where you start to see volume pick up. You start to see what should have happened, didn't happen. And that's actually what we're talking about in healthcare today as well. The only way to catch these moves at the very start is to, number one, track sector rotation on a daily basis. Because remember, our job is not to predict. Our job is to pay attention to, let's say Andrew. Let's say Andrew runs a hedge fund. And let's say Andrew's got like $5 billion that he's managing. At some point, there's going to be, his research is going to be like, wow, his whole staff is going to be like, we really need to start paying attention to this. The cash flows look great. Everything looks amazing at this price level. It's interesting now. And he starts to make real commitments. And that starts on a daily basis. If you're just looking at those way out further time frames, nothing wrong with that, but you're going to miss the start. You're going to miss where you could start to maybe put it, like Jesse Livermore talks about, putting a probe out into the market, maybe just like what we call a P1 entry, initial position size. But you need to do the work on a daily basis. You just need some structure that when the day ends, you have to say to yourself, where was somebody doing something significant today? And you start to pay attention to that. And then that day starts to become a couple of days, and a couple of days becomes a week. And you start to, it's actually pretty easy, where you start to notice the flow of money into and out of individual sectors. And then you just pop up your list and you're like, okay, that sector is on fire right now. I got to pay attention. So I'm going to walk you kind of through how we do that. I'm going to walk you through the Daily Ticker newsletter for this coming week. And if you want to, you can actually grab a copy of the Daily Ticker for today. You can actually grab that below the video if you want to follow along with me, or just download your own copy. So again, we want to work our way through here. You can actually see how the market ended last week. And this is actually how things ended on Friday. And energy just absolutely exploded. Now, again, some of them are breaking out to new highs. Some of them just happen to have a really good week. And I'm going to walk you through that. But before we do that, I want to walk you over here, and you can actually see how the money just started to come out of communication services, which not only was Meta, which is just profit taking at this point. Google took a drubbing in there as well, and consumer cyclical. The only one that's really kind of hanging in there in consumer cyclical was Tesla, and Tesla actually broke above 200 and couldn't hold it. I just want to talk about this for a second as well. We actually did have a swing trade. You can actually see the entry over here in Tesla. And this is a really big question that we get all the time, is at what point does a profitable trade that pulls back, should you get out of it? We have far too many new members coming into our community saying, I had a profitable trade and then I took a big loss on it. You got to map that out before the trade. So Tesla is actually a pretty good example from last week. We had an entry on our initial position, and we were looking at basically 198 running up to about 235-ish. So take a look at the trade over here. Basically looking at it from there to kind of like right over here in this area. Now the stock broke out and pulled back and basically came back to our entry price. That's really what ended up happening. Now, when you're actually putting on your trades, it's more important to know exactly what you're going to do next than it is to predict what's going to happen next, because we can't know what's exactly going to happen in the market. We do know we can set up odds of something following through, but what's more important is no matter what happens, you know what you're going to do. So it's a very common thing where a stock will move in our favor, pull back, and you got to make a decision. Do I get out where I got in, or do I let it pull back a little bit? Typically, we'll scale back a little bit. So if we got 1,000 shares and it pulls all the way back to where it shouldn't, so to speak, I have no problem with reducing that risk just a little bit, because look, let's face it, if it's not doing what you want it to do, why would you keep money in that deal? It's one of the most amazing things about stock trading is it's very different from real estate and a lot of other investments where you can get your liquidities like that. You can get out of the deal and just not have as much in it unless it finally starts to do what you want. So one thing I just want to start out this week, again, a lot of what we do is mindset, but that mindset has to translate into good actions. Know what you're going to do before you need to do it. So the phrase that we use all the time is very simple. Know what's probably going to happen next, but always know what you're definitely going to do. And again, speaking to you who held all those trades through 2022, and that big move to the downside, if you held those trades hoping they were going to come back, you just didn't think that one layer through of if this thing rolls over and starts to go into bearish order flow, what do I plan to do? And you could have saved yourself a small fortune just having a stop loss and respecting it. All right. So we're going to hop on over and we're going to talk about today's game plan for the week. We're going to work ourselves through the week. Now, the big thing here is there's a ton of economic data coming out this week. We usually use investing.com, pretty good website, but we can actually see coming out here tomorrow on Tuesday. It's going to be a lot of fireworks tomorrow and a little bit later in the week as well. We're going to see on Thursday. So you can actually see there's Fed speakers. It feels like every single day this week, but this is the big one right here. Tuesday, core CPI, we're looking at year over year and month over month. Those are big numbers. You can actually see what they are over here. Working your way down, we also have more Fed speakers. Working our way into Thursday, this is where we start to get a little bit more volatile again. So you got PPI and housing starts and jobless claims and the Philly Fed all coming out pre-market on Thursday. So what does that mean for you as you are mapping it out? So let's say you're starting to trade this week and you're writing down pockets of opportunity where the higher probability trades, or dare I say, there'll be less news to get in the way of price action. Should you just trade every single day the same way? Or should you look at the calendar and be like, okay, those 2 days are going to have some increased volatility. Maybe I should be kind of like saving my buying power for some better opportunities where there's greater reward potential. So just be aware of that. And also, if you're carrying swing trades, you need to plan for this, same as you need to plan for earnings before it happens, is if you have overnight positions into these big news stories, you need to know they're coming out, and you can't ask somebody, 5 minutes before 8:25 in the morning, should I hold this swing trade 5 minutes before it comes out? Again, successful traders do that one extra 5-minute game planning and say, I know exactly what I'm going to do. And if this happens, then I plan to do this. It's not about predicting. It's not about forecasting. It's not about having 25 monitors. It's about knowing what you plan to do before you need to do it. So what we're going to walk through now, having that set the tone for, we now know all these economic data and Fed speakers are going to speak this week. You can literally look at the map and get a position. We also actually, as a big benefit today, you can also get the options market update and the Forex market update on today's daily ticker. So make sure you click below the video and get your own copy of this. It's actually kind of cool to have that full breakdown, because look, we know currencies affect the stock market. The stock market will affect options volatility and options opportunities in there. So you really want to kind of make yourself into a well-rounded trader where you're like, if that happens, that should probably happen. And then that makes this kind of trade for me. So put those pieces together and you'll have a lot more conviction in your ideas. Okay. So again, obviously big economic data, CPI numbers before the market on Tuesday. Thursday should be some more fireworks. And again, this is really what's important here. So knowing the volatility should spike is to also know where the opportunity is. Again, talking about kind of like the theme of the day is, how do I know these things are going to happen at the start? Well, we don't know exactly what's going to happen, but we do know that those 2 days are going to produce some pretty good volatility. So you need to know that. You can't be surprised, be like, what's going on in the market, and then start Googling it when the market spikes. Okay. Maybe I'm dating myself. They were Googling it. All right. So now setting up the market. So again, if you can see everything we're doing over here, we're actually working our way through the power pyramid, which is what we do every day. Stocks held the 2023 bullish tone. And you can actually see here the uptrend is still in place for 2023. A little bit of what we call a bullish U-turn, where we traded down, came back up. That's kind of deceiving, though. It looks a lot better on the daily chart. If we kind of zoom out on the SPY on Friday, we really didn't do much. We did close near the high. We did open lower, but kind of just sitting there. What is impressive, though, is we held that little bit longer term bid and closed near the high. Now, taking this step a little bit further, right? We're going to add a little bit more to the charts, and we're going to dive into this a little bit deeper. We're going to take a look at this part over here compared to this part over here. Again, real money spent. That's what we're going to talk about. Last week, the market traded like it was tired. And again, we just mapped that out over there. It's one of those things where, yes, it was hard to trade. Yes, it wasn't easy to find follow through. I get it, but you got to recognize it in the moment, and that's what we're going to talk about. This is the pocket of opportunity that we're going to discuss over here, and this pocket of opportunity. We're going to give you a big list of stocks that meet that criteria as well. And by the way, I just want to throw this out there, right? everybody's here watching these videos on YouTube. You either want to be entertained or you want to actually learn something or get some ideas where you can help yourself make some more money, right? YouTube is fantastic for that. The one thing I want to caution you about, though, is make sure that however you decide to start allocating money to the markets, finally decide on a method. Because if you're choosing a different way of trading every single week based on every single YouTube video or PDF that you downloaded, it's going to be really, really hard to have conviction. So if I can give you any kind of advanced trader suggestion, is really start to think about what kind of personality you have and how that should translate into the market. What kind of risk tolerance you have? How big is your account size? Should you start out with options or should you go straight into stocks and build your account up from there? It is infinitely easier to eventually find your groove as a trader when you're focused on one strategy and not all of them. If you could think about, like, just again, something that we are really, really, really strong on in our community is you're running a trading business, and you have to think you have limited capital. We all have limited capital to run a trading business. Could you imagine somebody running a business where they're trying to sell tacos and pizza and tires and like everything like that? You need to focus your capital and figure out where you're going to get the best return on investment. So while you're perusing all these YouTube videos, including mine, I hope you choose mine all the time. I just want to say that you will find it easier to be profitable when you settle on one system that you believe in, that you've traded, and one that works. And quite frankly, trading becomes a lot easier and less stressful too, because now you're not lost. You're only looking for something specific as opposed to looking for everything. And I'm actually going to break that down for you right now, what that means. Okay. So as we work our way through and admit that the market was a little tired last week, that means we had to trade a certain way. Very stock specific ideas and much more geared towards a cash flow profit taking strategy. So what exactly does that mean? We actually had somebody last week ask, well, I mentioned cash flow all the time, or I mentioned bigger profits all the time. Cash flow simply means that when you look at your sector rotation, and again, I want to make sure you see what that looks like right now. When you're tracking money in and out of the market, both on a weekly basis and on a daily basis, it's very important to recognize the current market conditions and what's available. Of course, we'd like to go in there and trade heavy every single day. And we'd like to be, I can't wait to buy stocks. The best stocks to buy now every day, right? It's not, the market doesn't work like that, and neither does business. I know Jim Cramer's all the time saying there's a bull market somewhere, and pretty much he's right. But with that in mind, you still have to recognize how deep those commitments are from the smart money, from the deep pockets, and what those commitments mean for how you should be committing to the market. So what we're essentially talking about here, and the way that we look at things, and you can actually see that on the screen right now, and I'll make it bigger in just a second, is our job is quite simple. Is somebody with deep pockets making a commitment with real money? If yes, we're going to join them. And the longer they're doing that in both the market, sectors, groups, and individual stocks, the longer it's obvious, the more that we should be, hey, let's stick around. This is a nice party. But when we start to see the market, and I'll show this to you again, I'll blow this up a little bit so you can see it. I just want to explain it first. When we see that it's not obvious, and we make a very big distinction between energy candlesticks and indecision candlesticks, when we see there's indecision, when we see there's a lot of yellow on the screen and nothing significant is happening, you have to recognize that as a trader and say, I just can't step on the gas all the time and expect these monster profits if the market's not offering that right now. And that's one part of trading. Then the other part of the market is recognizing when it is happening and you owe it to yourself to make more. So the way that you actually do this is you just need to spend that extra couple of minutes every day and track where money is flowing. It's a lot easier than predicting. We get people at, where do I think stocks are going to be 6 months from now? Nobody knows. If you don't believe me, just go back and look at headlines for the last week or two and think about where everybody's saying things are going to be from last week to this week. Nobody knows. You need to trade in the moment and just keep following the money. And I'm going to show you what that means right now. This is kind of a cool lesson. And again, you can download this below. So again, you want to focus here on how obvious it is and how long it's been obvious and where. That's a big part of trading. Okay. Very stock specific ideas geared towards cash flow. So cash flow means that we recognize conditions were a little bit less than perfect across the board. If they were a little bit better, then we would size up in those groups. But if the majority of the market was showing yellow, which is kind of like neutral, right? We all know how to drive. It's kind of neutral. Then you have to recognize that in the moment and trade accordingly. So that's what cash flow means. Cash flow means maybe you could find some good ideas, but you're not expecting bigger follow through. So recognizing that in the moment is a big key to trading success. As much as we'd like it to be, every day is not step on the gas. So again, that's going to make or save you a small fortune, just knowing that. And acting on it. Knowing it and acting on it is not the same thing. This is important because most traders miss it and dig a hole. And this is really the most important part. I'm actually going to highlight this because I'm sure everybody will see themselves in this quote right now. You dig yourself a hole, a couple of sloppy board trades here and there, and you're down a few $1,000s for the week. And after you realize what you've done, you decide to trade bigger and make back the losses. Because the market conditions are poor, the hole gets deeper. So again, raise your hand if you can see yourself in that, where you don't recognize it when it's unfolding. You don't have a roadmap like we're talking about right now. You absolutely, and again, I'm crazy about this, especially new people that come into our community. The very first thing that we do together before I even show you the strategy is how to set your charts up so that your charts give you the roadmap to read the strategy. The system is everything, but you can't use the system if your software is not set up to say, it's obvious or it's not. If it's obvious, step on the gas. If it's not, pull back a little bit. Don't dig yourself a hole, because then when the road clears up, instead of digging out of that hole, you're going to be starting here and getting profitable. That's trading in the real world. That's where we live, okay? Recognizing the market conditions. Do not dig yourself a hole simply because you're bored, or I bought a course, or I joined a coaching program, or the market's open and I can't wait to trade. You should be allocating money and putting your money in harm's way because there's an edge, not simply because the market's opened. Very important. I know this is easy to talk about, but you got to act on it, right? Because market conditions are poor and the hole gets deeper. Now, this is important. This is why we use the term order flow. This is really bringing everything I'm talking about now into a nice little bow. Sometimes, but rarely, we'll use the term trend. The goal is to determine if somebody is spending money and making a commitment with real dollars. Now, I just want to really bring this home and make this point to everybody, because this is really important. You do not want to be the best chart reader in the world. You did not open a trading account to be the world's best chart reader. You opened a trading account to make money. And chart reading and trading are two completely different things. If you're just looking for chart patterns and flags and ascending wedges and head and shoulders and MACD crossovers and all that stuff, you're getting lost in the software, and you're not actually paying attention and asking yourself the question, is somebody doing something significant, and how long have they been doing it? I'm going to explain what that means now. You definitely want to download this, okay? So again, you can get a copy of this below the video, all right? Is someone spending money, making a commitment with real dollars? When you combine price action and volume, you start to level up your game. You start to visualize, and this is important. We used Andrew as an example there. Andrew, the hedge fund manager. You start to visualize someone at a hedge fund making a decision to start buying or selling. Real dollars hitting the market, affecting the movement of your favorite stocks. It's not simply above the moving average. It's someone with deep pockets taking research and putting their money on the line the same way that you are. But here's the beauty of this, is you get to see people with deep pockets making commitments before you even have to put your money in the market. This is where trading becomes, dare I say it, fun. Because when you know what you're looking for, you're no longer lost. And what we're looking for is order flow. If you don't know what order flow is, it's simply when smart money, deep pockets starts to put money into the market hour by hour, day by day, week by week, and you start to pay attention to whether or not it's done with volume. And we're going to tie that together now too, because volume is literally the receipt of the market telling you how much was spent. The more money that was spent, the more conviction you should have in what you see. So what we're going to take a look at now and tie that back into the healthcare stocks and the energy stocks is whether or not the beautiful price action that we see happened with significant volume. And remember, volume is money. And how long did it happen? Was it one big day, or did it trade the entire week where somebody said 5 days worth of buying or 5 days worth of selling? These kind of things are pretty interesting to put together, and they're not hard. We've been talking about it now just on this video, right? But I want to give you more of a roadmap because this is really where it starts to come together for you, okay? It's our job to notice these things, right? Stocks go up and down because of those commitments, but what are we actually looking for? The very first thing we do in our boot camp is we teach energy candlesticks versus melted candles. Very, very first thing, okay? Is someone pushing a stock around, which is energy, large-bodied candlesticks? Is there a dominant side or is there indecision? Now, the obvious question comes in right now is which candlesticks should you be watching? Well, how long do you plan to hold the trade? The order flow that matters to you should be dictated by how long you plan to hold the trade. Are you holding the trade for 10 minutes or you're holding the trade for 10 days to 3 months? That's going to dictate, because what you're looking for is the higher time frame dominates. So are you looking at buying for the last hour and you're kind of in and out of the market quite a bit for those of you that are day trading? Or are you like most of the people that are in the market, you have a full-time job or maybe you're running a business, you want to gravitate towards higher time frames because you want to say, okay, did somebody buy the stock yesterday or have they been doing it for a couple of weeks? I'm just going to piggyback until I see that change. So we're kind of working our way through simplicity, and we're going to get to simplicity right now as well, okay? All right. Is someone pushing a stock around? Is there a dominant side or is there indecision? Now, again, how do you see indecision, right? Be like, oh my gosh, I can't see it, right? No, we actually just gave that to you right here. Does this look like conviction on Friday? Absolutely not. This is what tells you whether or not somebody's stepping up. This is what the 4 weeks of conviction, we usually go out 4 weeks, so just to give you a little bit more detail heading on into that, okay? So working our way through, it's such a simple concept, but one we take for granted because we have access to thousands and thousands of indicators. And just as an insider fact, most professional traders keep it simple. More is definitely not better. My opinion, and from what I've seen on trading floors, I'm not alone. Keep it simple, all right? So as the market unfolds this week, so now we're projecting the week. We're mapping out what we plan to do this week. We're looking for commitments. We're looking for allocation of funds to new ideas that we could take advantage of. Remember, last week was a mess. But we're seeing some pockets of opportunity, which is what we're going to start to take a look at right now, okay? Tech was great for 5 weeks, but it looks like money started shifting into energy. And we're also starting to see some headlines. If you remember about a week and a half ago, we actually mentioned once we start to see some headlines from OPEC, that's what we're going to actually end up seeing some energy stocks catch a bid. And I'm going to show you what that looks like in a second. Now, this is important here as well. A lot of these healthcare stocks that we just mentioned, they're still in bearish order flow, and you can actually see what the XLV is doing right here. And again, it's important to put this in here so you start to map out what you plan to do for the week. You can start to see that they are still in bearish order flow, and the weekly chart has actually been bearish, melted candles, bearish indecision for a while, which again, you can actually see here in healthcare. Look at how long healthcare has either been negative or going down. Hasn't sprinkled in anything like this. However, we're starting to see some of them push some really good weeks. And I want to get into that in a second. But here's the important thing. Remember what we talked about before. A lot of people are like, I missed it. I missed the bottom. I wasn't on top of those stocks. How do I know? Again, a little bit of game planning, a little bit of paying attention, a little bit of saying, okay, today, this week, this month, which stocks are at the top of the list? Which groups are at the top of the list? You literally can start to see the flow of money in and out. That's not trading yet. We're just performing analysis. We're just reading the tape. We're just reading the price action. It's not trading. Remember, there's a difference between chart reading, which is kind of the lowest level. Then there's performing analysis, which is order flow and tape reading. That's what we do in our system, which is the New York method. But then at the very top of that pyramid is actually making money. So raise your hand if you had dozens of good ideas in January, but you didn't make enough money on them. That's that last level where we're actually now understanding managing risk, position size, kicking out the losers, understanding how and when to hold the good trades longer, when to add to good positions. Remember, chart reading is kind of the bottom of the pyramid. You're just looking at patterns, right? One step above that, now you're putting the patterns in the context of really looking for order flow, looking for money. Is it still obvious? Is it still valid? But the golden goose on the top that we all want is actually learning how to manage trades. And if you doubt that for a second, just ask yourself, how many good trades did I get out of too soon? How many bad trades did I hold too long? That just means now the market is giving you feedback on what you need to learn. If you've had good ideas, fantastic, but now you need to learn how to trade. You need to learn how to read it in the moment. Should we step on the gas? Should we hold? Should we get out? Should we add? That's trading. That's very, very different from just having the strategy. Having a strategy is not trading. It's just what to look at. Learning how to use it in the moment is where the money's made. That's where you get paid. All right. So let's continue to work our way through here. XLV remains bearish, which you can see here. All right. Tech stocks carried the market higher to start 2023. Last week, the gravy train paused. Again, we talked about Meta pulling back a bit, right? Meta broke down. Google broke down. Google got hammered. This is actually the level that we were talking about in Google. Inside candle in Google sitting at 50-period moving average support, bouncing a little bit. If it loses 94, we're looking at Google actually all the way down at 86. That's something to keep an eye on there, okay? If that continues, it's a good time to curate a list of go-to stocks, those stocks that you trade every week. Don't be bored, be good. So what I'm essentially saying here is if the market continues to unfold like this, where there's a lot of indecision, then that means that you need to start building a list. If you haven't done it already, and our community has this one solid list that we trade that's in our watch list every single week, no matter what. They're what you might call the market leaders, the popular stocks that you probably know. Those are the stocks that you're game planning for, or at least watching, and you have them in your software every single day. Because if the market becomes obvious, those stocks kind of have a good beta with the market and they move kind of in sync with the market. And we do get a lot of questions. Well, if you're reading the market and then trading the stocks, why don't we just trade the market? And it's actually because it's better percentage moves for the individual stock. So the market is kind of the conviction in which stocks we're looking at, and the sector rotation takes that one step higher, but the stocks have much greater percentage moves than the market. So you're kind of leaning on the market and then trading the stocks within the market. So it's the market, sector rotation, industry groups, and then which stocks you're trading. So let's actually work our way down this a little bit more. You can make a copy of this for yourself. As we work our way through, you can actually see now in sector rotation, money poured out of communication services. So we got a little bit of a write-up on that. Meta, here's the one that I'm looking at right now, heading into this week. Financial stocks, specifically Morgan Stanley, JP Morgan, and American Express in the week, in this coming week. So you can actually get a look here. Morgan Stanley hanging out there, still at a nice breakout level. JP Morgan actually held the bid, and American Express actually hanging on up there as well. If you didn't happen to catch it, 36 was a big breakout level in the XLF in the financial ETF, and that's kind of hanging in there as well. Working our way down, you can actually see we have a big list of energy stocks to pay attention to, and look at the percentage gains that they had last week. Obviously, ExxonMobil broke out new all-time highs last week. I want to be very clear about what we're looking for here. They have been notorious for false breakouts. So what we're looking for in ExxonMobil is it needs to hold above this 115 level, okay? Working our way through industrial stocks, Boeing has been kind of the superstar, but Boeing is now pausing at 215 and has actually been just kind of sitting there for a while. Have an alert set for 215 until it gets there. Nothing to do there. We need to see that one punch through 215. Now we're kind of getting into aerospace defense. RTX, have an alert set for RTX at 102. And FedEx. FedEx actually a really pretty clean chart right now. It's just a question of whether we get follow through. You can see some nice order flow. You can see the breakout here, which actually filled the gap over here. And the next level where sellers did something significant in FedEx is 235. So I probably want to see this over 210 before I even take a look at it. But 210 to 235 would kind of be the next trade in FedEx that I'm looking for. So you can actually see we're breaking it all the way down. There's the FedEx trade. If the market has weakness, I just want to be clear about this. This is really a big way to level up your game. If the market's going straight up every day, you should just be looking for stocks to buy, right? However, the market kind of went sideways. We saw a lot of that bullish mojo kind of work its way out of the market. If the market actually does have what we call holding the offer, which means that sellers are kind of dumping supply on the market, you want to have a list of stocks that are already weak when the market is strong, because those stocks will go down the most if the market rolls over. So the stocks that are in my game plan for that this week are these two right here. Gold stocks actually took a big hit last week, AEM and NEM also. And you can see we actually break down aerospace and defense. and some healthcare stocks. Now, again, speaking of these healthcare stocks, I want to be super clear. They're not in bullish order flow yet. They're still clearly going to the downside. But if you take a look at what they did last week compared to the market, that's actually something to pay attention to, but not a trade yet. So what you need to do is keep your tracking journal and say, okay, last week, healthcare stocks and certain energy stocks, we just gave you that list as well, had big energy candlesticks last week. So there was a lot of conviction from Monday through Friday last week. They might not be all breaking out yet, but you need to be aware of where money's flowing into and out of, because then when they start to catch a bid and it happens again, you now have the list instead of scrambling and saying, what am I going to do? What am I going to do? Because you put in that little extra 15 minutes. So you can actually make a copy of this for yourself. Click the link. It's actually below the video. You can actually get a download of this. Either click file, copy, or download, whichever one is more convenient for you. I think it's kind of fun to start the week out with what we're expecting, what we see this week, and then more importantly, which stocks and what sectors we need to be prepared for, because if it follows through, fantastic, we're ready. If it doesn't, we'll have another cup of coffee and just make sure that we preserve our capital until a couple of better opportunities come along. So if you have any stocks you'd like to discuss this week or anything you want to talk about, leave a comment below the video. I promise I'll get back to you as soon as I can. Thank you so much for joining me today. Remember, download that. It's below the video. I'll speak to you soon. Thank you so much, everybody. Take care now.